All right, welcome to today's show. So I'm going to jump in. We're going to talk about strategies, big buy of 10,000 Bitcoin. And I'm also going to jump in and share with you a recent interview I watched with Saylor. And we're going to talk about strategies, real valuation in the marketplace. We're also going to talk about this man, Chanos, who is shorting MSTR stock and why he doesn't clearly understand the stock. Also going to go through some different posts on X that are interesting and share with you what might be happening with interest rates. And it's probable to happen with interest rates that are going to either be raised or decreased. And we'll see by the report here today. All right, we're jumping in right now. This is not tax advice, not financial advice, not legal advice. And do your own research. All right, so let's jump in. This is we're going to go through a few things pretty quickly here in terms of some posts that I pulled, and then I'm going to go through a whole basic slideshow I put together for you on an analysis of one of Saylor's interviews and what strategies really freaking doing so that everybody can understand the power and strength of this company. Now, Saylor, wonderful in his post on X. You can see that he's congratulating the entire Metaplanet team and shareholder community. I mean, look at that graph. Metaplanet has gone up through the roof. They're crushing it as a Japanese company, and their stock is soaring. And I love Saylor's perspective on how he truly values other Bitcoin treasury companies. He believes this is a win-win game, and he wants more and more people to get involved as Bitcoin treasury companies. So kudos to Saylor for playing a win-win game. We're going to skip this one here. Jeff Walton talks about MSTR now ranked 95th largest U.S. company by market cap and how it jumped one company today and flat week over week. Strategy looking like a risk-off asset along with Lockheed Martin amidst market uncertainty. Day 324 in a row of qualifying for the S&P 500 market cap threshold, which is exciting because eventually strategy will be invited to the S&P 500 index and be one of the companies that's on passive income buys over and out. And strategy is the 16th largest publicly traded equity by volume. And that is the story. Okay. So good quote by Jeff. He's got a great channel, MSTR North. Good stuff there. True North. So this is also another thing from Jeff that's saying you're looking at this guy, James Chanos, who's actually putting all these different charts in about MSTR. And I'm going to totally debunk what Chanos is talking about here in my presentation today, because he's does not understand what strategy is doing. And by the way, he's analyzing the company, he clearly does not understand what Bitcoin is, and he clearly does not understand what strategy is doing. And we're going to walk through that today. Through today's entire presentation, we're going to debunk this. Okay. So while there all are shorts on strategy, I'm going to show you why they're going to lose and why strategy is going to win. Okay. So we've got Adam Livingston, who says people who don't trust corporate Bitcoin treasuries still trust treasuries, the IOUs of a government that monetizes existential dread at 100% debt to GDP and calls it risk-free. All right, so basically what he's saying is trust the Bitcoin treasury companies because Bitcoin crushes. And when you look at people investing in government bonds and things of that nature and giving the government their money, it's like, why would you invest money in a government that's an incredible amount of debt? That's basically the summary of this post. So there's that. If you look at this chart too, we can see that liquidity is tightening. Over 400,000 Bitcoin have been pulled from exchanges in the last 6 months. So the liquidity crunch is coming. I'm going to share with you a statistic that Saylor shares in this presentation that I'm doing today of like just how much of a crunch we're in, and it's going to start hitting the price, which is exciting as well. Here's a post by Chris Milas. He just shows you the different Bitcoin treasury companies, and you can see up here the blockchain group. You see this graph going up if you can zoom in and see it, like the straight up and vertical graph here is the blockchain group, and that's the symbol is ALTBG up here if you want to go check them out. And then you see MSTR, which is further down in terms of their year-to-date returns. You see Metaplanet is in the purple, Metaplanet's in the purple here. So you see their returns. So you have Metaplanet and some other companies that are just going straight up and vertical, hence the power of the Bitcoin treasury strategy. Okay. And then this is an update on what might happen with interest rates coming up. This is from the Martini guy. He says, Poly market users predict a 97.5% chance that the Fed will cut rates this week. So this would be good news if the Fed cuts rates. That would infuse more liquidity into the system. More liquidity into the system means more money. More money goes into the money supply. We know that Bitcoin is actually trailing the money supply. As the money supply goes up, Bitcoin's on a 3 to 6 month lag, meaning like it goes up 3 months later after the money supply goes up, or 6 months. So more money into the system would rise all boats and Bitcoin would go up. So that's good news. And then this is a post by Jeff Parks. Says subpar altcoins ditching their own assets to build a Bitcoin treasury. It was not on my 2025 bingo card. So we have some altcoins that are ditching their own assets to build Bitcoin treasury. So this is fascinating stuff as well. So now let's jump in and let's get into the game here on what's really happening. Okay, so let's take a look at what James Chanos is saying is not fully accurate, why the people who are shorting strategy, I believe, are going to lose. And this gives you insight into what strategy is actually doing. So there's a business model misconception, and these are Saylor's words. And he's talking about James Chanos here. And he says, I don't think he understands what our business model is. We're the largest issuer of Bitcoin-backed credit instruments in the world. And then he goes on to give an example of this. He says, preferred stock versus equity. Last week, we raised $1 billion by selling preferred stock. Money we never have to pay back. It's a very key point. Money we never have to pay back. We pay a dividend on it, but we can suspend it if needed. So he's talking about the Stride product that recently came out, that it does pay a dividend. It does pay fixed income to investors. But as he says, we can suspend the dividend anytime we want. So he's saying the risk that we have is not high. And Chanos, this is what Saylor's saying about Chanos, he thinks we have to sell equity, but we're issuing preferreds that aren't dilutive, meet different market requirements, and don't involve common stock. So when you're looking at the strength of strategy because of the preferred stock, and we look at this big buy that they just made, $1 billion worth of Bitcoin, they have so many different ways to buy Bitcoin. And so this guy, James Chanos, is saying, Strategy's business model isn't correct. And why would I go buy Strategy when they're 2x the price of Bitcoin? And it doesn't make any sense. He's like, I'll just buy Bitcoin and I'll short MSTR. And clearly, one who makes that statement does not fully understand what Strategy is doing. And this just shows you the basic misunderstanding that Wall Street overall has on MSTR is they don't understand what they're doing as a general group, right? There are certain people in Wall Street that have caught on and understand it. Clearly, people like Larry Fink and other people that are buying Bitcoin. But just because somebody buys Bitcoin and understands Bitcoin does not mean they understand what MSTR is doing. And so Saylor is literally telling you, here's what we're doing, okay? So it's a complete misunderstood on what MSTR is doing. And as he says, we're the largest issuer of Bitcoin-backed credit instruments in the world. So like Strike, Strife, Stride, convertible bonds, that's why they're kicking butt, okay? So on capital strategy and buying Bitcoin, let's hear what Saylor has to say about this. He says funding Bitcoin purchases. He says that $110 million worth of Bitcoin we bought last week, that came from issuing preferreds, not common stock. And again, this week, we see him issuing preferreds. And leveraging Bitcoin collateral, this is also important to understand, is we're using our $60 billion in Bitcoin collateral to issue instruments that never come due. There's no real interest rate risk. So when he's saying instruments that never come due, like Stride and Strife and Strike, they're perpetual preferred dividends that are being paid out. So perpetual means it goes on and on and on. Like he could like somebody who buys these perpetuals, they could pass them on to their grandkids, because Strategy's plan is we're just going to pay the dividend out forever. That's what perpetual means. And so it's very different than like a convertible note or convertible bond where it comes due in 4 to 5 years. And then you got to pay the person back their principal, or you, whatever deal you work. If you're going to have them converted into stock, then they convert it into stock. But in this situation with Strife and Strike and Stride, it's perpetual. So they just keep paying out the interest. And you'll see why this makes sense in a second as we compare traditional bonds to what Strategy is actually doing. There's no comparison. Like, he's going to eat the bond market. He's going to eat the bond market, guys. Okay. So responding to short sellers. So here's what Saylor says. And this is a very, very interesting point, and you just got to kind of look at it to understand what he's talking about. Now, this doesn't mean for those of us who own MSTR stock, like, we can't, like, it doesn't mean that MSTR won't go down, right? It doesn't mean that it won't have big swings down at all. He's not saying this. He's just talking about the power of the strength of the company and their strategy. Now, as an individual investor, I do have to look at it from a different point of view from my perspective, because like, we could have huge swings up, huge swings down. We could see a drop in Strategy. We don't know. But like, this is what he's saying about the strength of the company and his response to short sellers. So let's watch this. If someone shorts us, this is Saylor's words. If someone shorts us and the stock drops, we'll just issue preferreds, buy back the stock, and make money from for shareholders. So let's listen to this again. If someone shorts us, he's talking about like James Chanos or people like that are shorting MSTR, and the stock drops, we'll just issue preferreds, buy back the stock, and make money for shareholders. If the stock trades at a weak premium, we sell preferreds. If it rallies, the short sellers get liquidated. So basically what he's saying here is we have a strategy, pun intended, for every scenario that comes up. If somebody shorts us, we'll just buy back this, we'll issue preferreds, buy back the stock. If the stock trades at a weak premium, we don't need to issue more common shares. We'll just sell the preferreds like he's doing right now. If the stock rallies up, the shorts are going to get liquidated. So either way, he's painting a win-win-win scenario for Strategy as a company over the long term. Okay. So this just goes to show you the strength of this organization. Again, does not mean as an MSTR common shareholder like me, we don't have risk. We do. Okay. One who holds it over 4 to 5 years, I believe there's very, very, very little risk, because I think over a 4 to 5 year period, we're going to see today, 4 years later, Strategy stock is going to be way up. But in the short term, it's extremely volatile. Depending on when somebody buys the stock, it's extremely volatile for them. They could buy it at 400. It could drop down to 250. Okay. So this is just giving you like the idea of like why Strategy is such a powerhouse, why Strategy is not at risk for being liquidated, is not at risk for being a company that's going to go under. It's just not at risk when you understand what they're doing. Okay. Now, on breaking down the company valuation, this is kind of a point that's argued about or misunderstood as well, because you're not valuing Strategy like you would a Google or an Apple, right? You're not looking at earnings per share. It's a totally different scenario of how Strategy actually runs, because they hold Bitcoin. So it's not like they're selling widgets out in the marketplace. Like, here's my iPhone that I'm selling today, and here's what kind of earnings we're making on our iPhones that we're selling every single day on our widgets. It's a totally different strategy with a company that keeps buying and acquiring Bitcoin. So the way you would value them is different, and the way you would look at the company is different, which is why James Chanos does not understand what Strategy is doing. Okay. He's looking through an old lens, and he's looking at it from the view of from the view of somebody who's looking at a stock from an old lens. And this is the new lens, $100 billion Bitcoin treasury operation. If we generate 10 billion in Bitcoin gains this year, you could apply a 10x or 20x multiple. So what Saylor's saying is his interest is in creating Bitcoin gains. Okay. And the target this year is to create $15 billion in Bitcoin gains for the company. That's what they're targeting. So he's saying if we generate 10 billion in Bitcoin gains this year, you could apply a 10x or a 20x multiple to the gains. So if you apply a 10x multiple to our $10 billion in gains, it's a $100 billion company. If you apply a 20x multiple, it's a $200 billion company. If you look at a $15 billion Bitcoin gain this year, which is what strategy is going for and believes they're going to hit, and you would do a 10x multiple, it's a $150 billion company. At a 20x multiple, it's a $300 billion company. At a 30x multiple, it's a $450 billion company. So if you watch Saylor in his interviews, he's talking about the fact that, like, if you look at how a stock like Apple gets valued, it's getting valued at a 30x multiple of its earnings. So what he's doing is he's not saying this, we're not earnings per share, because that's not how strategy's built. They're not built like an Apple. But if you were to compare the two and compare the two worlds in the best way you could, he says we're looking at Bitcoin gains. And so you need to put a multiple on our Bitcoin gains, which is the exact reason why people are shorting this stock don't understand the company. And James Chanos, his main point that he's looking at is he's saying, hey, it's a $60 billion it has $60 billion of assets in Bitcoin. That's what it has. So why are people paying 2x for strategy stock? That doesn't make any sense. Why would I just not buy Bitcoin? I just buy Bitcoin rather than paying 2x for that when I'm buying strategy. And the reason why Saylor is saying buy strategy and buy strategy and buy strategy is because of this point to the left here on, you have to start looking at valuing strategy on their Bitcoin gains and putting a multiple on that. And he's being conservative when you say a 10x multiple on it. It should be more like a 20 or 30x multiple on their Bitcoin gains. And it makes complete sense. Okay, because you don't just value a company based on like with their current situation and their current scene. A lot of the companies on this on the stock exchange are valued by future forecasts and future earnings and what they think future is going to happen with the company as well, not just their present time situation. Okay, so that's what Saylor's saying. Value us in a similar way. On long-term Bitcoin price trajectory, Saylor in his recent interview, this was done on Bloomberg, and you could go take a look at it. And somebody was talking about the winter that could potentially come for Bitcoin strategy. In Saylor's words, he says, winter isn't coming back. We're past that phase. Bitcoin is not going to zero. It's going to 1 million. And then he says institutional and government support. The president supports it. The cabinet supports it. Big institutional players are coming in. BlackRock ETFs are buying too. Nation states are entering the space. So Saylor's prediction is winter isn't coming back. Now, in the same breath of that, he says if Bitcoin goes up to $1 million at some point, of course, we could have a $200,000 drawdown where it could go from 1 million to 800,000 or 750,000. But for the purpose of the Bitcoin winter or the crypto winters that we've seen in the past, he thinks that winter isn't coming back. These are his words. These are not mine. I'm just relaying some information. Okay. So now let's talk about the digital gold rush that's taking place. Saylor says we are in a digital gold rush. You've got 10 years to buy Bitcoin and then it's gone. And he's also being asked in multiple interviews what he thinks about these different companies that are getting involved. And does it appear that this is going to be competition for you, where you have companies in Japan like MetaPlanet, who are Bitcoin treasury companies? You have the blockchain group. You have all different kinds of companies that are coming on board to put, Bitcoin in their treasury. And so there's over 100 now that exist. And what Saylor's saying is the competition is virtuous. It's a good game because the more people buy Bitcoin, the more strategy wins as well. So it's one of these games that's a win-win game. It's not a bad sign. It's actually bullish that more Bitcoin treasury companies are coming on the scene. And then there's also a talk about competing against ETFs and fixed income funds. And here's what Saylor says about this, is that we're not competing against them. So we're competing, is what he's basically saying. We offer 400 basis points more yield. So when he compares the current types of fixed income funds that are out there in the marketplace, he's saying we're not really competing with this marketplace per se because we're outpacing the competition. We're offering 400 basis points more on the yield. So if they're paying 5 or 6% and we're paying 10%, there's not really much comparison on that. And then when you look at what strategy is doing, strategy has better collateral. Their collateral is Bitcoin. So when you look at the current fixed income market, how does the fixed income market currently compare with strategy? They don't. It's not even in the same universe. It's not even the same universe. Strategy's got better collateral. They've got a better strategy overall. They're paying out on their fixed income products 10% versus other companies that are paying out 5 and 6% that are not Bitcoin treasury companies, that are just fixed income offerings out in the marketplace. And there's just not even a comparison. So now we look at strategy as being one of the only ones doing this. And so what Saylor says is we're the only company in the world that has issued preferred stock backed by Bitcoin. So we're the only company in the world that has issued preferred stock backed by Bitcoin. That's huge, huge. And we've done 3 in the last 5 months. So when you look at Stride, Strife, and Strike, that's the preferred stock. 3 in the last 5 months. No ETF can do that. No other Bitcoin company has. So when you just look at the array of products the strategy has, because they have this treasure chest of $60 billion worth of Bitcoin now, they have the most pristine collateral on the face of the planet, and they're continuing to acquire more. They're 592,000, but $1 billion more today. So as soon as these short sellers get liquidated, we're going to see a bump up in the price is what my prediction is. Again, not financial advice, but we got to liquidate the shorts. Strategy starts hitting 395 or 396, breaks 400, goes to 415 and beyond. We're going to see a big shoot up in the price because the shorts are going to get liquidated, and we're going to see strategy pump up. All right. So JP Morgan, Berkshire, traditional finance, we know they don't believe in strategy. They don't believe in what Bitcoin is. And Saylor says electricity and airplanes were called worthless too. People fear what they don't understand. And then he says, if JP Morgan or Berkshire enters the Bitcoin space, great. They'll be buying $1 million in Bitcoin, and it helps the whole market. So more and more companies are coming around. I just saw James from Invest Answers. He posted something on the CEO of Cardano. Now they're getting in the Bitcoin game. And this guy was like a hater of Bitcoin for years, and now they're getting in the game. I just saw another post of this is actually worth checking out. Let me see if I can find this for you. But this is a totally interesting post here. Let's see if this is. Yeah, this is an interesting one here. So if you see this on my screen, this is a post from Kiyosaki today. I think it's from Kiyosaki. Yeah. And he says, from trash to Bitcoin, the most insane treasury I've ever seen. And here's the main thing to look at. A NASDAQ listed solar company just announced they're converting all their net cash flows from one project into Bitcoin. So all net cash flows from their project are going into Bitcoin. Every single dollar of profit is going straight into the world's hardest digital asset. And they're doing it with electricity generated from a closed landfill. They're literally turning garbage dumps into Bitcoin, right? Isn't this amazing? So Solar Bank here just flipped the entire treasury playbook upside down. This solar project built on a former trash dump will generate clean electricity day after day, but instead of selling these electrons for pennies like everyone else, they're executing something brilliant. Solar panels, electricity, they're generating profits, and they're putting it into Bitcoin. Like the amount of new stuff that's popping up here in the marketplace is insane, guys. Insane. So we definitely are going to have a Bitcoin crunch. There's no question about it. We're definitely seeing the supply shrinking. And it's just not even close what's happening now in the marketplace to it's just insane the amount of new strategies that are coming up to buy Bitcoin. Great. So I'm not going to read this whole long thing. I'm just going to give you the summary here on why preferreds over convertibles. We know that convertible bonds have been used by strategy in the past, and where they've done, converts over a 4 or 5 year period. And convertible bonds are short-term plays with 3 to 4 years max, and they have a capped upside. With Strike and Strife, Saylor saying we sold long duration calls and perpetual dividends, things you could hand down to your grandkids. So basically what he means there is with Strike and Strife, we're just paying out a perpetual dividend. So there's no cap on it. It's not like in 5 years we stop paying the dividend. On Strife, the dividend goes on in perpetuity. It goes on forever. So he's saying like somebody could go buy Strife and they could literally just pass it on to their grandkids. Like, hey, here it is. You're going to get a 10% dividend for life. And it just keeps paying and paying and paying. It could pay for the next 10 years, 20 years, 30 years, 40 years. Convertible bonds have windows that are like 3 to 4 years, 5 years. Make sense? And then, of course, Strike has a different, it's a different scenario because Strike, you're getting about an 8% dividend that's paid out. And then you have the option to convert Strike into common shares in the future when Strike goes above a certain price point in terms of the common share price point. And then you can convert it into common shares. So different ways that they're set up, but again, perpetual dividends that pay on and on and on and on, which is brilliant. They never come due. So this is what Saylor says, very important. He's talking about Strike and Strife. They never come due. We don't face liquidation risk. They never come due. We don't face liquidation risk. All right. That's what he's saying. They don't come due. So they don't all of a sudden have to pay back the $1 billion all at once that somebody puts in, or the $5 billion all at once that somebody puts in. They're just paying a dividend quarter after quarter, year after year, game over. So let's talk about the real competition. There's fixed income ETFs out there, and they're charging 50 to 80 basis points in fees. So when you look at some of the fixed income ETFs, the fixed income marketplace out there, they're paying sometimes 6 and 7% yields, but they're also paying a 50 to 80% basis point. Now, if you watched my presentation yesterday, I talked about how 100 basis points could essentially, which is like a 1% management fee, could essentially wipe out 28% of somebody's gains over a 30-year period. So when you look at the basis points, which is the management fees that a lot of these people are charging in the bond ETFs or the fixed income ETFs, when you look at the basis points that fund managers are charging even in stocks, it wipes out your returns over time. So when you look at the yield that some of these fixed income ETFs are paying out at 6 to 7%, you got to minus out the basis points. So really a 6% is really paying a 5.5% or a 5, and a 7% is really paying a 5.5% or a 6. Make sense? And then when you look at what's happening with Strife and Strike on preferred stock, they're offering an 8 to 10% yield. And the difference is with 10 times to 100 times the liquidity. And he says homogeneous credit here, which he's basically saying is basically the same credit risk. Like there's no more risk that we're taking as strategy than some of these fixed income ETFs are taking. But we're just way freaking better. And over 6x collateralization, which is what Saylor's saying, is that we have so much collateral, we have so much Bitcoin in our treasury that like we are the solid choice, is what he's saying. And then there was a question for Saylor on quantum computing. People are asking him about quantum computing, and he says, I don't worry about quantum. If it could break crypto, it would break Microsoft, Google, JP Morgan, everyone. If that happens, all major systems will upgrade to quantum-resistant protocols. We'll see it coming long before. All right, so there's been this talk about quantum computing for the last 4 or 5 months and how it could crash down Bitcoin and destroy the blockchain. He's basically saying, hey, if it were to destroy the blockchain, we'd have bigger problems than that. Microsoft, Google, they'd all be wiped out as well. So there's going to be handles for that. And then he talks about AI and the future of Bitcoin. AI needs speed. AI will want to move money at the speed of light. It won't wait for legacy banks. So AI is great for Bitcoin. We look at the speeding up of the digital economy. We look at the operation of how AI is working with speed, and we look at a strategy in digital assets. And like we are in the 21st century, 22nd century, 23rd century. We're ahead of the curve. And the rest of the world hasn't caught up, particularly legacy banks and the legacy financial system. He talks about Bitcoin, digital capital. That means AI will demand digital capital, and Bitcoin is the purest form. Accelerate demand. AI is a demand driver for Bitcoin. It accelerates the entire digital asset economy. Of course, because we're moving more and more into the digital world of speed, and that's what Bitcoin is, right? It's in the digital world. It's a digital asset, and it's speed. So AI is only going to help that. And then, of course, MicroStrategy buys 10,100 more Bitcoin, now holds 592,100 Bitcoin worth $41.84 billion. And if you look at the current valuation of it, it's over $60 billion as a result of the price of Bitcoin today, which is approximately 107 or 108 when I looked. Let's see where we're at right now. 108, 108,000 on Bitcoin. All right. So hang tight. This is the basic of what you're involved in, not financial advice, not tax advice, not legal advice, but we are an incredible situation. Are in the game with strategy, and Bitcoin are literally ahead of the game and ahead of the curve. And while Wall Street is waking up to the fact that strategy is a behemoth, while Wall Street is waking up to the fact that more and more Bitcoin treasury companies are coming on board, while Wall Street's waking up to the fact that Bitcoin is a real thing, those of us who are in Bitcoin and strategy are going to be miles and miles and miles ahead by the time the world wakes up. Now, with that said, if you want to share something with your family or your friends, I did an entire presentation yesterday. It talked about just the history of money. It talked about the history of different financial products, 401k plans, different rates of return that you get in other financial products. And it made a comparison of why Bitcoin is superior and why strategy is superior. And I've always found that if you want to convince somebody, if you want to orange pill them, you got to give them comparative data. And so everything that I gave today is for those of us who are in strategy and we totally understand what it is, and also reinforcing why strategy is a superior stock, why strategy has a superior strategy in the marketplace, and why Bitcoin crushes all. And at the end of the day, we understand that. And I always want to reinforce one's confidence and conviction in what actual Bitcoin is and what strategy actually is, which is what the purpose of today's presentation was. But also, if you look at yesterday's or Saturday's presentation that I did, that's to pass on to family members to give them the comparative data, because you can't orange pill somebody who doesn't have comparative data of like, here's where I'm at now, and here's where Bitcoin is at. And then you compare the two. And so that entire presentation was designed to show people like the 401k scam and why 401k plans, I think, are just a total scam. Why we look at traditional financial products and why 1% management fees wipe out people's wealth. How we look at the money printer and the amount of money that was printed in 2020 and 2021, and how we looked at the effects of inflation on people's traditional assets and traditional stocks and bonds and etc. And so what I did was a whole analysis, and then I went through the history of money, because when you can trace down the source of the lies and you can go back to the original origin of money, and we can trace along the evolution of money and when money went off the rails and when the banking systems came in and they started to just print money and create fake money. And so if you want to orange pill somebody, you go look at that video and you show it to them, because then they'll start to understand, oh, wow, here's the current scene, massive problem. Here's the ideal scene. And people don't want to leave the current scene because they're afraid. Like they'd rather be right. They'd rather be right on the Titanic and be like, oh, I'm totally right. The sink is shipping. This ship is sinking, right? So it'd be like, I'm totally right. The ship is sinking and I'm right in this. And I know we're going down and I know, but I've got like, I've got maybe 4 hours. So I'm just going to stay on the ship that is sinking and I'm going to die. And they're going to be right in their dying because they're comfortable. They know it's sinking. But if there was a way to get off the Titanic and go to a better ship that was built more powerfully and more sound and more strong, and one could see, wow, here's the comparison of why this ship is better, of course, they would get in the life raft and they go over to the better ship. But people can't see that. So in their rightness and in their comfort, they're happy to sink in the ship over 4 to 5 hours because they're like, great. All right, I'm right. I'm right about sinking. I'm going to die. Okay, but at least I'm right about it. And that's the traditional finance world. Okay. So go watch that other video from Saturday, and that'll surely help. But in a recap of what I talked about today, let's just recap the hot bullet points. Number one, strategy buys more Bitcoin, 10,000. Number two, strategy buys more Bitcoin and they acquire it with preferred stock, which is what we continue to see them do. And the fact that they bought $1 billion of Bitcoin issuing preferreds is huge, 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 huge. Number three, James Chanos, who's talking about shorting MSTR and is shorting MSTR and is talking about how strategy does not have the valuation that it has and why it shouldn't have the valuation is completely incorrect. And he does not understand strategy. And his whole premise is we should go and just buy Bitcoin and short MSTR, when the whole reason why we hold MSTR is because it does trade at a premium. And the reason it warrants trading for a premium is because it has all these different products that it can issue in the marketplace that no other company on planet Earth can do. No other company on planet Earth can do it. None, zero, zilch. And because strategy is backed by $60 billion worth of Bitcoin, you don't just value it based on $60 billion worth of Bitcoin. Okay. Or 42 billion that's now valued at 60 something billion dollars. You don't value it based on that. Saylor's saying you value us based on our Bitcoin gain. And our goal this year is to hit a $15 billion Bitcoin gain. And then you base us based on you value us based on the Bitcoin gain at a 10x, a 20x, and a 30x valuation. And that's why strategy should be trading at a premium. Not to mention that it has the most pristine collateral on the face of the planet. And when you compare strategy to other fixed income products in the marketplace, it's like comparing planet Earth to Mars. Maybe one day Mars will be the future civilization, right? When you look at planet Earth, it ain't so hot, it ain't so great. Take a look at the different industries. Finance industry, built on lies. Okay? Drug industry, mostly built on lies. Right? Look at the different industries that are crumbling. Food industry, poison. Okay? So many different industries are built on lies, untruths, poison, and our financial industry is being poisoned. And now you have a new financial industry that is emerging based on truth. Saylor calls it the truth virus. He calls it the freedom virus. But you have the most pristine collateral in the world, $60 billion worth sitting in their vault. And now they can create all these different kinds of products, as well as these fixed income products, Strife, Strike, and Stride, as well as issuing more common shares. And who knows what else he's going to come out with. But as they continue to acquire Bitcoin and they continue to rise up the strength of this Bitcoin vault, they will be unstoppable. And they already are. We're past the point. You can't stop strategy. They have the ultimate strategy. You can't stop them. There's going to be shorts that come in the marketplace. The stock might go down. It may stay in a holding pattern because there's 10% of the outstanding shares that are out there right now. 10% of the outstanding shares are being shorted. So there's people that got short positions. So that's a relative amount there. But at the end of the day, strategy will win the game, and Saylor is crushing Wall Street, completely crushing. So I love what we have. I think this is a great freaking company. I think Bitcoin's phenomenal, and this is the new wave. So if you like this video, like it down below. Add some comments when I end the video because I'm streaming on multiple platforms. You can add some comments down on YouTube. That would help out. Share it with a friend. And let's just get through and liquidate these shorts and then rocket ride up to the next level. I hope this serves you guys. Have an incredible, incredible rest of the day, and I'll see you on the other side.